Welcome to the cost analysis tool. I thought it would be good to give you a brief explanation of how you can use the cost analysis tool in Excel. First of all, why are we using this tool? If you want to calculate an ROI, as you will most likely remember, you need to know your total cost. We've already looked at how you can estimate your net benefits, but figuring out your potential total cost for a project is really important in order to get approval for a specific project. So calculating an ROI relies heavily on figuring out your total cost. To identify your total cost, you need to add up your one-time costs, these are often initial project costs, with your total operational costs. These are the costs of keeping your project running. So we have two types of categories, your one-time cost and your operational cost. Now, first of all, your one-time costs can be divided into the project cost and into CAPEX. CAPEX I already briefly explained. CAPEX is capital expenditure. The good thing about capital expenditure is that it depreciates over time. So when you spend $100,000 on a project, a one-time project cost, it just disappears. When you spend 100,000 euros in CAPEX, it stays on the balance sheet and it depreciates over time. So the way you spend the money for the organization, the financial way, is much more beneficial because the value stays on the balance sheet, stays in the company, contrary to normal project cost. So usually managers like it when you have a relatively high degree of CAPEX and a smaller degree of project cost. However, CAPEX costs are not that usual within HR, but it's good to keep in the back of your mind that CAPEX expenditure are preferred over just one-time project cost. And the second category is operational costs. These are the costs of keeping a project running, and these operational costs occur again and again, year over year or month over month, depending on the timeline that you're working with. Let's take a look at the cost analysis tool. In the first worksheet, you see the project cost. These are the operational one-time costs. You see a cost type, who made the cost, the hourly wage for this person, the average time spent, the column that multiplies 1 and 2, the number of cost drivers, how often does this appear, and the last column which multiplies column 3 and 4. So that's your total cost column. You see the total staffing cost, and you see the total cost of the project. So for cost types, when you start a project and when you try to identify all the costs for a project, you write down all the potential cost types. And in this module, we use the example of finding and hiring a trainer, using the trainer and then having management take training sessions, which is a really simple example. It's not really complicated. So in this case, in your operational one-time cost, you list everything. So the finding a trainer, hiring a trainer, that process costs a number of, in this case, 6 hours for the HR business partner that manages this project. The HR business partner has an hourly wage. Don't forget to calculate with gross salary, not net salary. So do include secondary benefits, etc. When you calculate your hourly wage. Second column lists how many hours are spent on finding and hiring a trainer in this case. Third column multiplies those. It happens only once. You only have to find one trainer. So the total costs are in this case $285. So the second major one-time operational cost is the actual fee of the trainer. In our example, the trainer costs $30,000. So we don't hire the trainer necessarily. No, we hire him on the project, and he operates as an independent. He sends us an invoice of $30,000 after the project is completed or halfway through the project. So part of the operational costs are the fees for the trainer. So what you see is that the total project costs are the $260 to find and get the right trainer on board and the 30,000 US dollars you pay the trainer. So the total operational expenditure in this case is 30,258 US dollars. Now, of course, this is a very simple example. When you do it for your own organization, when you identify an opportunity to reduce turnover or to reduce absenteeism, you'll probably have a long list of all kinds of different cost types, a specification of who works on this, the hourly wage, the average time spent, and the number of cost drivers, and your total staffing cost will most likely be much higher. I also mentioned CAPEX, the one-time expenditure. In this case, we have no capital expenditure, but it could very well be, for example, when you have to build a specific training space within the organization. So you redecorate, you need to buy a number of fancy computer screens, touch screens that you can work with. Those kinds of expenditure could be qualified as capital expenditure. So there's a special box in this Excel file titled Capital Expenditure. List all the potential capital expenditure in this specific document. So say when you need to create a training room, and the training room costs 50,000 US dollars, you have an additional CAPEX, and your total one-time costs will be 50k plus 30k. So in this case, 80,258 US dollars. Anyway, this is a way of creating an overview of the operational one-time cost. If you lack the space, just insert the cells and you can work with this. It works absolutely fine, and all the formulas should still be intact. So this is the way of calculating your operational one-time expenditure. In the second worksheet, you see your operational costs. These are repeating costs. And I'll zoom in a bit. In this case, you see the same structure as in the previous worksheet. And for your staffing cost, you see the training of managers. Managers all need to spend 96 hours for an hourly wage of 60 US dollars. You can convert this column into US dollars. And that goes times 30, because there's 30 managers in training. That's a total operational cost. That's a cost that goes out per year, but you can also define this per month. But in the first year, that's a total operational cost of 172,000 US dollars and 800 US dollars extra. So this basically works the same. You can list all the operational costs. For example, when you want to build a training space and you need to pay catering for internal services, that's your operational cost whenever you use the training space, etc. On the other hand, you also have a very similar, the cost of billing, when for the project people send you invoices, external parties, and you need to pay them. That goes into the cost of billing. The good thing is only the yellow fields you have to fill in. Now for the cost of billing, it's fairly simple that you can specify who sends you stuff. You specify the total amount, let's say 5,000 US dollars, and then you have your total billing cost. Go times your cost drivers, and you say, hey, I got this invoice once, and I got a second invoice, and you can specify the services and the name of the company, etc. And it will all add up in the end to your total OPEX per year. So you have your total staffing cost. In this case, every year we keep this project going, it costs us 172,800 US dollars. Plus a specific invoice, I don't know from who, but that's 5,000 extra. So per year we have an OPEX of 177,800 US dollars. So that means that our total cost in this case are our project cost plus our OPEX. So in this case, our project costs are 80 something thousand euros. Plus our OPEX, and our OPEX in this case are 177,800 euros times the number of years operational. So this is the formula you can use. 80,000 is one-time cost, and every year you keep the project going is another 177,000 US dollars. So after 10 years, the total project cost should be around 1.8 million euros. So that's a way you can calculate project cost for project that's either happen once a year. So this is a way of calculating your project cost when a project runs for a year. You have a total cost of 250,000 euros. When this project runs for 5 years, you have a total project cost of roughly roughly 1 million US dollars. So this is how you calculate your total cost. And if we now go back to the slides, this is the way you can get an estimation of your return on investment. Only thing you need to do is quantify the benefits, and then you can make your ROI calculation. Anyway, this is a brief explanation of the cost analysis tool. Good luck using it. Whenever you make an intervention, try to use this framework, apply it to the intervention you're making, and your business case will be much, much stronger.